Hi again, Nate Swaby here, Swaby Estates. And today I'm going to talk about pre-construction. I wanted to kind of get into another realm of investment, another opportunistic idea, at least instead of thinking about simply buying a house that's existing today, which is not a bad idea. I mean, you instantaneously get right into cash flow, especially if it's an investment property, or maybe you need to live in it, so you want to jump in right now, and that's one option. The other option is pre-construction or pre-con development, and there's a lot of benefits to this, obviously. Some of which is flexibility, right? Some people need flexibility. Maybe you're a first-time home buyer. You're coming in, you don't have enough money or capital to do so, and you still want to get into the market, and you figure, how can I do that? I can't buy a house today. The interest rates are too high, and right now, if I buy it, I have to be able to afford to pay the mortgage and so forth. So there's another alternative idea, which is pre-construction. Now, the benefits to pre-construction. Now, obviously, there's builders that are involved, and they're the ones that are prospecting the land, and of course, they have a project, an idea, architecture, and engineering. And ideally, you're getting into the project because you want to benefit for the future. Now, this is future prospecting. So the good thing about future prospecting is if you understand politics, macroeconomics, and economy, then you also understand a little bit more about business cycles and timing. Or you can just, of course, ask your professional, like your real estate broker or somebody else of that magnitude, accountant, perhaps lawyer. But the bottom line is you want to find out when would be the best time in terms of economic cycle. Right now, we know we're at a high interest rate environment. We're at the end of a cycle. This is more in the cycle where you have, obviously job losses. You have businesses that go out of business. You have people that lose their shirt. And it's not necessarily a great thing to hear, but these are part of the cycles. It's part of the economy. It's part of how everything works in terms of business cycle. It's one of those moments you got to float through here and make wise decisions, but it also bodes a really great opportunity as a buyer's market because it puts the sellers under pressure, of course. And under that situation as a buyer, if you do have the capital or the ability to, right now, it's a great opportunity here. It's a buyer's market. You get to make, you have the opportunity to at least negotiate your terms a little bit better in terms of being the buyer. This also reflects on the builder. The builder might have this project coming out, and of course, they need to sell this project. And under the circumstances and being harder to get mortgages, obviously they're going to have less volume, less people that are actually looking to buy, and for that reason they need to attract the buyer. So this offers a lot of incentives, and some of those incentives can be things like, maybe they go and give you a lower deposit structure. Maybe they're only looking for a 10% down or a 5% down. I mean, that's very possible, especially if you get further away from the more populated areas. Some builders might even offer you free upgrades of up to $40,000 or $50,000, depending on the circumstance. You could even maybe you have a condo development that you're looking into, and maybe they might offer you free parking or free locker. Maybe it's a free assignment. Maybe they're capping levies. So there's a lot of incentives that you can be offered today to purchase today. Now, understanding economics and understanding economy and business cycles, you would also know that you'd want to try to time that and buy that project relative to the time. If you know and understand politics and economics, you understand what's going on right now, and you understand that the Federal Reserve's got a goal and a mandate to reach around that 2% target. And for that reason, we know inflation is coming down, and that's a great thing in terms of what we're trying to achieve as an economy. And of course, we want to know when interest rates might be coming down. And if you were to prospect that information, you'd probably have a pretty good idea. Nobody knows for sure, but you have a good idea where things are leading. And right now, it seems like maybe in Q2 there might be some, possible rate reductions. Who knows? We'll see when we get there. Everything's obviously on a case-by-case basis, but we know with regards to the information we have at hand, that might be a possibility. We might have that coming down in 2024. And with that being known, maybe you're looking for development that's a little bit further out. Maybe you're looking for development that completes in 2024, late 2024. Maybe you look for something that's 2025 or 2026. So you could take advantage of the circumstances today as a buyer market and get those incentives. And then the project might complete in 2 years from now where the market might be more favorable. In this case, you would have generated a lot of equity built within. You would have gotten a great deal at the time. And then when the property's ready, now you can do what you want with it. Now, a couple things that we'll talk about is some of the interesting factors in regards to buying a development. Well, obviously you're buying for prospect. So you're buying a piece of paper, a contract that says you have the right to buy. And that is also something that has value. So some people you might have heard the term, assignment sales and stuff. So that's the ability to sell a contract to the next person to take your space essentially, and then you would sell it for a value. Obviously, there's tax implications there and how it's deemed, is whether it's a taxable gain, is it income, is it is it a capital gain? Well, in this case, it would be more of an income, but again, that's something you would consult your personal accountant for that to get that information. But nonetheless, you need to understand how that would affect you financially in terms of if you were to sell that contract. But that is an option. Of course, that has to be an option that's provided by the builder and allows you to do so, but that's something you look into. Some of the other things, cap levies, developers always have to pay levies. Now, levies are relative to all the infrastructure going into the area that the city might charge to the builder. Now, that obviously gets passed on to the buyer because you're buying a piece of that share, and of course, you're going to pay relative to that piece. And that might be capped, or maybe they waive the levies because that's part of the incentives. So these are some things that you might want to look into. Also, when you're buying these pre-constructions, again, flexible payment structures. Maybe you're trying to come to the market, you don't have enough money to throw 20% down. Yeah, sure, you can go through CMHC and go get yourself below 20%, especially if it's under $1 million the property. But maybe you only have 5 or 10%. Maybe you need to make the money while time goes by. So then this makes it very flexible for you. Maybe there's a 5% down, and then over time there's another deposit down. So you can pay this in structured payments. Maybe you can even negotiate with the builder to have a special structured payment. It really just depends on circumstances, of course. But these are things and opportunities that you could take advantage of under a market circumstance like today. And then, of course, as you build into this payment structure, you're building into your equity. Of course, when the property becomes due, you have options, right? If you're principal residence, of course, you got to be mindful of, again, tax-related things. If you are principal residence, you tend to have a rebate off the top, which would provide you to not actually pay the HST that you would have to pay on the property otherwise if it's an investment property. So that's another benefit that you get to take advantage of. Of course, you should be holding the property for 12 months if you're going to go down that road. But again, consult your accountant to ensure that you're doing the right thing financially in terms of this. Of course, if it's an investment property, you want to be mindful of the taxes you're going to have to pay, which is your HST tax towards the property, which is probably $24,000. But to understand the process, if you're buying it as an investment property, you would pay this. And then, of course, if you were to be able to, come up with a 12-month lease, you could actually request to get this back. So there's things that you could take advantage of. But these are all things that you should be consulting your professional for. But to understand that you could buy something today, you can organize a great payment structure, you could take advantage of some of these incentives, and then buy something that won't be ready for another 2-3 years down the road, is a great opportunity, especially in a market like today. And especially if we know rates are peaking, great opportunity to try to take advantage of the market. And again, when you're doing these things, you're looking for area. Area is a very important factor. You're looking at possibly transportation, because that's going to be a big factor in terms of density, in terms of growth. You're looking at the type of city that it's in. Is this a city that's in the middle of nowhere, or is it a city that's closer in? Is it accessible to transportation? Does it have a growth perspective? How many people are building in the area? What's the infrastructure look like? These are all things that you're going to be looking into, especially when you're buying and prospecting development, and what might be the return on investment once you get the property in hand. So again, consulting your professional, whether it be your real estate broker or your accountant, whether you have a project coordinator, whatever you need to do to get this information. But of course, just to be understanding that there is great value in buying development. You could even split your investment. Maybe you have 20% to put down and you have 2 projects offering 10% down incentives that you could close on. Mind you, probably have an investment property if you're splitting it up 2 ways, but with that being said, you'll probably end up with 20% down at the end. But know that there's other things such as lending opportunities. If you were to consult your mortgage broker, there is potential opportunities to be able to re-leverage the actual equity gained, and then you actually take advantage of that to do the closing. So there is a lot of great ideas that you can do to take advantage and to basically accelerate your investment portfolio. But it is a great opportunity. This is separate from buying an existing property that you can take advantage of and have equity when you get the property to actually have something to work with, whether you want to use it and keep the property, whether you want to use it to live in, whether you want to sell it, whether you want to sell it on assignment. These are all great options and flexibility that are provided from the pre-construction development. So again, just wanted to open the mind on other investment ideas. And of course, if you do have questions, feel free to reach out. There's so many opportunities out there, of course, based on the market. And again, prospecting the right ones, prospecting the right investment method that you want to use to accelerate your wealth in the end. I hope this was of value. Of course, there's a lot more information. If you do want to reach out, feel free. If you do have any other information that you're interested in sharing, feel free to put in the comments. I mean, I'll read it. We'll see what we can do. I would love to keep putting out these videos and just giving information, jogging the mind and giving people things to think about in terms of investment ideas. Again, thanks again. Keep an open mind, and we'll see you next time.